Welcome to The Explainer. The Bitcoin ETF space is absolutely packed, but let's be real, not all of them are built the same. Today, we're cutting through the noise to look at two completely different strategies so you can actually understand what's going on under the hood of your investment. With this flood of new Bitcoin products hitting the market, it's so easy to just grab a ticker and call it a day. But the real action, the real difference is in the engine. We're going to show you why the philosophy behind an ETF can be every bit as important as the asset it holds. All right, so here's our game plan. We'll start by framing the two big picture philosophies at play. Then we'll zoom in on the IBIT approach, and then the Maxi strategy. After that, we'll put them head to head and wrap it all up with what this actually means for you as an investor. Okay, first up, let's talk about the purest choice. This is that straightforward, no frills, what you see is what you get approach. And it's perfectly captured by BlackRock's iShares Bitcoin Trust, ticker IBIT. This is really the new school model, designed specifically to fix the headaches of older products like Grayscale's GBTC by simply holding Bitcoin directly. I mean, you can't get much clearer than that, right? It's right there in their own prospectus. Their one job, their only job, is to track the price of Bitcoin. That's it. A simple, singular goal, which is a world away from the wild premiums and discounts that gave GBTC investors nightmares for years. So this slide really lays out the playbook. IBIT is designed to do one thing and one thing only: hold spot Bitcoin. There's no fancy financial engineering, no leverage, no derivatives. They are so dedicated to this idea of purity that they literally abandon free money from things like network forks or airdrops just to keep things simple. This is about as direct as exposure gets. All right, now let's do a complete 180 and look at a totally different philosophy. If IBT is the purist, then the Simplify ETF, ticker MAXI, is the optimizer. It's not satisfied with just holding Bitcoin, it wants to make that Bitcoin work a whole lot harder. And you can see the difference right away in the official paperwork. Unlike IBIT, which has that one single focus, MAXI has a dual mandate. It wants the upside from Bitcoin's price, sure, but it's also actively hunting for a separate income stream. So the obvious question is, how does it do that? How do you get income from Bitcoin? This is where things get really interesting. The fund uses some pretty sophisticated financial tools to pull this off, and if you dig into their financial statements, you can see the two main engines powering this strategy. First up, we've got futures contracts. Maxi is actively trading these things, so, they're not just passively holding, they're trying to generate extra income by making educated bets on where prices are headed, essentially trying to create alpha on top of just tracking the spot price. And hey, this isn't just some theory on a whiteboard. This is real money we're talking about. The fund's own annual report shows they cashed out with over $11.6 million in realized gains just from trading futures. That is the plus income engine firing on all cylinders, generating actual returns on top of their Bitcoin exposure. Okay, the second big tool in the toolbox is the reverse repurchase agreement. Now, the easiest way to think about this is as a form of short-term borrowing. The fund is basically using its assets as collateral to get its hands on cash, which it can then turn around and use to fuel its other investment activities, like those futures trades we were just talking about. And just look at that number. We are not talking about small-scale stuff here. The financials show that Maxi had an average of nearly $47 million in these borrowing agreements out there every single day. Let's just call it what it is, folks. This is leverage. This is a fund actively using borrowed money to try and juice its returns. Okay, so we've had a good look under the hood of both of these vehicles. Now let's put these two completely different machines on the starting line and really see how they stack up side by side. This table really just crystallizes the whole debate for an investor, doesn't it? On one side, you have IBIT. It's the passive, purest play for simple, direct price exposure. And on the other, you've got Maxi, the active optimizer, using complexity, futures, and leverage, all in the hunt for enhanced returns. So, the million-dollar question, what does all this mean for your portfolio? The most important thing to remember is that it's not about which fund is better in some abstract sense, but about which one is the right tool for you. To figure out that fit, you've got to ask yourself these three simple questions. Number one, what's my actual goal here? Am I just trying to track the price of Bitcoin, or am I looking for an income-generating strategy on top of that? Two, how do I feel about complexity? Am I comfortable with an ETF that's using derivatives and borrowing money? And number three, what's my risk profile look like? Do I want the simple risk of just owning an asset, or the more complex, layered risk of an actively managed fund.
At the end of the day, there is no magic bullet here. There is no single best Bitcoin ETF. The right one is the one that lines up perfectly with your own goals, your own risk tolerance, and your personal investment philosophy. We've really only scratched the surface today. For our complete deep dive analysis and our final conclusions on how these products might fit into a portfolio, you have to go check out the full report over at notyouradvisor.com. And all of this leaves us with one final, pretty provocative thought. As we look out at the future of crypto investing, what's going to be the winning strategy? Is it going to be the straightforward simplicity of just holding the asset? Or is the real alpha, the real value, going to be found in the sophisticated, complex world of actively managed, income-generating funds? The market is just getting warmed up,